Welcome, everyone, to Noble Capital Markets Basic Industries Virtual Equity Conference, and thank you for joining us today. I am Mark Reichman, a Senior Research Analyst at Noble. I am pleased to introduce Mr. Mark Jarvis, President and Director of Giga Metals Corporation. Giga Metals' flagship asset is the Turnagain project, located in northern British Columbia, which contains one of the few significant undeveloped sulphide nickel and cobalt resources in the world. Turnagain is held in Hard Creek Nickel, a joint venture company owned 85% by Giga Metals Corporation and 15% by Mitsubishi Corporation. The preliminary feasibility study was released in October 2023. Giga Metals shares trade on the TSX Venture Exchange under the symbol GIGA, the OTCQX under the symbol GIGGF, and the Frankfurt Stock Exchange under the symbol BRR2. Mark?
Well, Mark, thank you very much for the introduction. And I just want to welcome everyone that's taking the time to attend this presentation. So this is a picture on our initial slide of our camp. You can see we've got a 1 kilometer airstrip. We're right beside the Turnagain River. But it's important to show the terrain. We are east of the Golden Triangle in northern BC. So we are not in the mountains where the Golden Triangle is. We are in rolling foothills terrain. And the terrain's important because this is easy to build roads, it's easy to put in infrastructure, and it's also perfect terrain for open pit mining. Here's the standard disclaimer. And as Mark mentioned earlier, we have 85% ownership of Hard Creek Nickel, which is our joint venture company. Mitsubishi Corp owns 15%. They got involved a couple of years ago, and they helped us to put together the pre-feasibility study. Excellent partners. Mitsubishi Corp, it's the commodity trading division of Mitsubishi Corp. They're the largest commodities trader in Japan. And their model is they like to have a minority interest at the development stage in a mine, and they help to get it built. They help to bring in partners, and they don't want to build it. They don't want to operate it, but they want to help get it built, and they want their share of the offtake and more if they can get it. So that's kind of their strategy, and they've done it extremely successfully over the years. So the PFS, these are some highlights. Typical year will produce about 35,000 tons a year of nickel, 2,000 tons a year of cobalt, and a beautiful high-grade concentrate, 18% nickel, 1.1% cobalt, very low in deleterious elements. This is a premium product for a smelter to buy. It's also an excellent product for pressure oxidation, which is an alternate route that is a more direct route to the cathode. We modeled a 30-year mine life, so it's a good long life. We think there's going to be more than that, and I'll get into the reasons why after that. A significant CapEx, which, I mean, for a mine this size, that's not unusual, 1.9 billion US. We can make nickel at the mine gate for $3.85 a pound. And then the C1 cost, which is taking in transportation and smelting costs, and adding back in something for the cobalt, is $4.65 a pound nickel. One of the strengths of the project is it is so technically simple. 99% of the nickel and cobalt are contained, of the recoverable nickel and cobalt are contained in one mineral, pentlandite. And so you have to only float one mineral. There's also not a lot of alteration products, which enhances the recovery. So crush, grind, froth flotation, the mining and processing, this looks like a copper porphyry type of operation, except perhaps even a simpler flow sheet than that. We have a very low strip ratio, which is extremely helpful to the economics. One of the things that happened during the PFS was we did what's called a geometallurgical program, where we can take samples from any part of the deposit, anything from our highest grades to what we know as waste rock. We can predict how much nickel we're going to recover. And we developed a prediction method that leads to very narrow error bars. This was a significant de-risking. Without getting too much in the weeds, it's very significant. This is a low carbon operation. We do have a pathway to carbon neutrality. Our tailings will absorb CO2 from the atmosphere, and you can measure that. This is our location, as I say, east of the Golden Triangle, north central British Columbia. The purple line shows where the power line goes. The dotted line is where we're going to have to build the power line. Significant capital cost is a significant portion of the capital cost, but there's indications that the Canadian and provincial governments will be there to support capital costs for developing critical minerals mines. We're in the joint Tahltan and Cascadena territory. They both agree that this is a 50-50 project between them. And both of them are generally supportive of responsible mining development. They're doing very well. There's mines operating up in the area. It's a mining-friendly area, basically. I'm not suggesting that it's a free pass. There's always lots of work to do, but in general, we're lucky where we're located. So here's the reserves, 950 million tons. We are low grade, but we've got high recoveries for this deposit type. And again, the strip ratio saves us a lot of money. So 950 million tons of reserves, and that's for a 30-year mine life. And this is what the 30-year production looks like. The green line is nickel. The blue line is cobalt. And that 950 million tons is a subset of our resources. We have 1.5 billion tons of measured plus indicated resources. We've got another 1.1 billion tons of inferred resources. So we believe that once we get this mine up and operating, it's going to be running for a very long time. And that's another strength of the project, the sheer scale. And this shows us the ultramafic intrusive, roughly 8 kilometers one end to the other, roughly 4 kilometers wide in the middle. And our resources are all down in this area. Most of the rest of it is unexplored or underexplored. The cliff area, we could add resources there and ultimately perhaps reserves. And this whole area up here is prospective. This green area here is not prospective for nickel, but just the prospective area, we think we've drilled off volumetrically less than 25% of what's prospective. And we've got drill holes up on the highland 4 kilometers away from our resource that are very similar. So it's suggestive. We've done no exploration in the ridge zone. We've never had the budget to totally explore this. And, I mean, we've got enough tons for now, but again, we think this will be running for a long, long time. The concentrate is a premium product. And it's largely because of it's very low in impurities such as arsenic, mercury, and cadmium. Multiple test work campaigns over the years. We've done a lot of metallurgical work, and we can reliably produce an 18% nickel, 1.1% cobalt concentrate. Premium product to sell to a smelter. We modeled selling to a smelter in our PFS because that's a market that exists. We think the market of the future, which does exist to some extent today, but will grow, is the pressure oxidation circuits, so that we could convert to the chemical forms of nickel that more efficiently go to the cathode, the battery cathode supply chain. So this is a suitable product for that for many reasons. So let's look at the nickel market. Boy, we're at lows again. There's a sense that the electric vehicle story is over. There's mine closures being announced, and then there's Indonesian nickel mining is all part of this. So this is a 40-year chart of nickel prices. And the black line is nickel prices in 2023 dollars. And so, in those terms, the average nickel price is about $11 a pound. And we're currently sitting at just over $7 a pound. The green line shows our estimated cost of production. So we're trading at a price, well, I'll get into that a bit more, but we're trading at a price where a lot of producers are losing money. If we were up and running, Giga would not be losing money on a cash basis, would be making a little bit of money. And the trick is to get through the periods of low prices and then be there producing when the price spikes, as it does from time to time. And here's a 1-year nickel chart. And looking at this just, makes me sad. But, on the other hand, it's so opportune. I mean, the thesis of investing is buy low, sell high. That starts with buying low. And the nickel price is at a price where, again, a lot of producers are losing money. This shows, this is from, Macquarie, Wood Mackenzie, and so forth. At current prices, which is right around here, about 40% of producers are losing money. And, short term, anything can happen. The nickel price can bob around, but if 40% of producers are losing money, that's a bottom. In the meantime, electric vehicle sales, the sentiment out there is that it's over. And it has changed. I mean, the last 10 years have been a compound annual growth rate of 50%. It's unbelievable growth. And it's mathematically unsustainable. This is from last May to the May before, the compound annual growth rate, or the growth rate year over year, was 19%. So it's still a blistering growth rate for electric vehicle adoption worldwide. And it's not just cars. One of the things that's kind of interesting is, I've got friends that think that robotics is going to take over. Because if you look at what's happening with artificial intelligence, and you start to think about the implications of that for robotics, robots could be an extremely fast-growing market over the next 10 to 20 years. And robots will need a high energy density batteries. And for high energy density, you have to have nickel. It's just got the characteristic, nickel is a high energy density metal. That's why it's so suitable for batteries. And if you want range in your electric vehicles, you need nickel as well. So they estimate at Macquarie that the annual demand growth rate for nickel in batteries alone is 13% between here and 2030. So you need an incremental almost 770,000 tons a year of nickel. That's 19 large new nickel projects, similar to the size of Turnagain. So the demand growth is there. The fall in prices have been stimulated by overproduction and overbuilding in Indonesia by the Chinese. So Indonesia has gone from nowhere to about 55% of world nickel supply just in the last 15 or 20 years. And these are lateritic deposits. They're strip mines. They're not open pit mines. They're like 10 meters thick, and they go on and on, mile after mile. This is the Morowali Industrial Park, which is where a lot of the nickel gets processed. And it's just, as I say, it's the deforestation. You're dealing with complex tropical rainforests, and you're just mowing them down. And there's a lot of pollution. This is not a culture of, environmental protection, just put it that way. And it's leading to contaminated drinking water for the people that live near these nickel operations. If you ever saw the movie Aaron Brockovich, CR6+, that is the chemical that was causing all the cancer. So our project is different. For one thing, we have to go through a rigorous environmental assessment. And that is a competitive disadvantage in pure economic terms. However, you can be happy with a Canadian project that if you're buying materials from a Canadian mining project, that it is environmentally friendly. And so the environmental aspects of what we're doing are high rather than low. We communicate and collaborate with our local Indigenous communities rather than running roughshod over them, as is happening in Indonesia. And it's a very low carbon operation. So I'm about to show you an economic comparison to HPAL. You can look at all this later. There's a lot of details about it that our engineer put in. But this is what it looks like. So on a pure economic basis, when you compare our project to high pressure, high temperature acid leach projects, any of the Western ones or the older Chinese ones, I mean, we're streets ahead of them. So this is cumulative cash flow. You start building here, you've got negative cash flow while you build, and then it turns around, you've got positive cash flow. We're even competitive with Chinese built HPAL projects in Indonesia. So, you know, in economic terms, they're not ahead of us. They're simply ahead of us in the ability to cut corners. So why should you look at us now? Well, strategic investors buy the lows when demand is growing rapidly. So if you've got an oversupply, you think it's temporary because demand is growing so quickly, that's the time to take your position. Not talking about timing. You don't know how long it's going to take. But if you buy and hold, at some point, you're going to see a tremendous lift in the price of nickel. And our project is very sensitive to nickel prices. We're the only 100% nickel sulphide project that's large and undeveloped in North America. All of the other projects are either ferronickel, in other words, there's no sulphide in it, and you know, they're not suitable for the kind of smelting that we would, or the kind of smelters we would sell to, or they're a mix of sulfide and ferronickel. So you have to sell at least two products. So this is simple again. We are in active discussions with potential strategic investors, and these discussions are being helped by Mitsubishi Corp, our partner. And the project has very, very low technical risk. That's one of the strengths. We also have a realistic path to carbon neutrality. We're a very low carbon project, but we could see even lower carbon if we start to account for the CO2 that gets absorbed by our tailings management facility. Small board, but a very strong board. Lyle Davis is our chairman. He used to work for the old Vancouver Stock Exchange chasing bad guys. He's you know, very strong in corporate governance. Bob Morris, before he joined our board, about 2 weeks before he joined our board, he retired as executive vice president at Vale. Vale is the giant Brazilian iron ore producer that bought Inco in Canada, the nickel producer. And so Bob was in charge of worldwide sales of Vale's base metals portfolio, copper, nickel, cobalt, and also precious metals, a huge portfolio. You know, anywhere between $5 and $8 billion a year, depending on commodities prices. Martin Vidra, our president, he had a 31-year at Sherritt, which is a Canadian company with a mine in Cuba, but they've also got a pressure oxidation refinery at Fort Saskatchewan, Alberta, just outside of Edmonton. And Martin's an engineer. He used to sell technology on behalf of Sherritt. Sherritt developed a good technology portfolio for processing nickel. Martin is an expert in processing nickel, but he also used to sell nickel and cobalt to end users. And so he knows all the end users. And he has his mandate within our company is to bring in strategic investors. And I give him full credit for bringing in Mitsubishi Corp. Here's our capitalization. And thank you very much. I'll stop here and take questions.
Thank you, Mark. The Turnagain project seems like it offers a lot of strengths. I mean, namely, it operates in a very favorable mining jurisdiction, just the sheer size and scale of the project, 30-year mine life. You mentioned that you've only drilled about 20% of the project, so this could be a multi-generational project. It'll produce high-grade, clean concentrate. It has certain environmental advantages in terms of its carbon footprint. You have a very attractive partner with Mitsubishi. You already have the preliminary feasibility study completed. And I think by the time this project goes into production, we'll be looking at a very different supply and demand outlook. And certainly that would have implications for pricing. So I just wanted to ask you just kind of what are the near-term plans and objectives to advance the project?
Well, I guess the nearest term event would be when we bring on a new strategic investor. And as I said, we've got serious discussions underway. And it seems we get contacted, once a month sort of thing by someone new. And we start those discussions. So something's going to break at some point. Some of the people we were talking to went away when the price of nickel dropped, which I think is short-sighted. The price of nickel dropping prompted others to call us. And I think those are the ones that, are more opportunistic, which is great. The time to buy is when prices are low.
Now, could you also just talk a little bit about the permitting process and the milestones there, and also, how that might also involve the First Nations groups?
Yeah, the First Nations group are talked to by the government and by the companies when you're going through the permitting process. It's very helpful to have them on side. The Canadian government and the provincial government are committed to speeding up the permitting process for building new mines if they're critical minerals, and certainly nickel and cobalt are critical minerals. Everybody in Canada would love to be in the supply chain for gigafactories in the US. And so, it's a real focus for governments to be permitting these things more rapidly. And, frankly, in environmental terms, we don't see any showstoppers. This looks really quite straightforward. But we'll see as we launch into the environmental assessment process. You never know what's going to come up. That's why you go through the process. But honestly, we look at it and we go, what is there? Where's the showstoppers? We don't see them.
Well, and the Canadian government has been very supportive of these types of projects. And so I was just wondering if you could also talk a little bit about what government programs exist to support, project financing or any other programs that would be relevant to Turnagain.
Well, specifically, the federal government has got a pot of money of $1 billion or $1.5 billion, I think, specifically for infrastructure, for critical minerals. And infrastructure, I asked the minister, well, what do you mean by infrastructure? And basically roads and wires, so we need to bring in fact, one of the biggest CapEx items in our PFS is bringing in the power line from BC Hydro. That's a significant CapEx hurdle. And if the government were to take that on, or even to take on half of it, it would have significant impacts to our financials. And the flip side of that is that, if we're getting power from the hydro grid in British Columbia, you've got, you're working with long-term contracts. And so we know what our cost of production will be for many, many years. We're not dependent on the price of coal. We're not dependent on the price of oil. And we're also not dependent on reagents like sulfur. And all of those commodities are volatile. We would have very, very steady costs.
Well, this project sequesters CO2 through naturally occurring mineral carbonation, which I guess transforms the tailings management facility into a permanent carbon mineralization facility. I was just curious, are there any opportunities for, tax credits or carbon credits?
Yeah, there absolutely are. We're working with a scientist at the University of British Columbia named Dr. Greg Dipple. And Greg has been studying this for about 20 years. Um, Mount Keith, a big nickel mine in Australia that's now nearing the end of its mine life, but also Diavik diamond mines in the Northwest Territories. So warm climates, cold climates. And he's developed a methodology to measure how much CO2 is being absorbed by a tailings pile. And if we can get his methodology certified by a government, now you can start claiming carbon credits and you can start selling them, and it could be another source of revenue for us. We know that this works. It's just all about how to measure how it works.
And then you mentioned Indonesia, and they were responsible for a large portion of the production in 2023. But going forward, a lot of the battery manufacturers and auto manufacturers are going to start requiring, to being able to source their nickel from clean sources and be able to audit that. And I think that will all come to bear on the government incentives that they receive. So how do you what changes do you anticipate in the nickel market? That in terms of the overall production and what impact that has on supply and demand and the trajectory of pricing.
Well, I think that there is a lot of impetus, particularly in Europe, less so in North America, but to some degree in North America as well, to control the supply chain and to have sources of clean critical minerals. And, for China to clean up its act in Indonesia would be very expensive. Obviously you can have good mining practices anywhere in the world, but it costs more. And so that would remove any cost advantage that you think they might have if they were to make Indonesian nickel IRMA compliant. IRMA is a standard used by European buyers and European governments. If they were to be IRMA compliant, it takes more than just, okay, you're running coal-fired power plants, you're strip mining, you're killing workers. I mean, the culture of safety is not there. And you can't just put in a few solar panels and go, there, now we're green. There's a lot more to it than that. And so I think over time, as the end users demand a clean nickel, that's only going to be advantageous for us.
I think so too. Now, just to end with, what are some of the milestones that investors should pay attention to, say over the next couple of months?
Well, again, we're just working on the main one right now is we need more money and we want investment at the project level. We don't want to be selling stock to strategic investors because our market cap is just simply too low. It doesn't make any sense. So we're looking at selling a piece of the project to get the next round of significant capital in. And I would like to launch on the environmental assessment and continue to do community work with the First Nations that are in our area.
Mark, thank you so much for joining us today.
Well, thank you, Mark. It's been a pleasure.